Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. It's Thursday, and we have another new high. I think that's 5 in a row. So what are you going to do? How are you going to trade it? How are you going to manage your positions? That's a question that everyone's been trying to deal with. There are times when the trade's methodical and you feel comfortable with things that are tight. You could buy, you could add, and then you could trim and trail. And then there's times when you've trimmed and trailed yourself out of a lot of great positions, and then you start going the other way and you feel as if you're fighting a trend and you're trying to do things because you're missing out. And that happens to traders across the board. Just hopefully you're not doing it from areas that it's really crushing you. At this point, I think a lot of traders a little earlier in this week started to get out of positions after playing this breakout above 52-week and all-time highs, and are maybe out of this little tail end and trying to fight it a little bit. But if you're doing it in select places, it's working because you're definitely getting some fades, and you had it today even if you were caught overnight. So let's just get into what I'm talking about. All right, if you go to the chart here of the S&P, you'll see that here's your 2-year chart. 2-year chart that just broke out to all-time highs. Woohoo! Hopefully you have been putting money away in a 401k, 529, 403b account for the last 5 years, 10 years, 15 years, 20 years. But short term, if you're trading for alpha, I know for me, we all have our strengths. My strength is when, after, first of all, this move was the Brexit move, and then this move, it was hard to tell. It was hard to see this snapback coming. If the bears were going to be in control, it would never have snapped back past here. Okay? But since the bears had no power, it went all the way back up to the prior high. So then what happened? Boom. Held here. That's your spot to get long. This is your spot to add. And then you pick and choose when you want to sell. Okay? And as of right now, we're building this ascending channel, and who knows how long it'll last. Is it going to last all the way up to here? Or is it going to break one of these days and give you a little bit of a retracement? That's kind of what we don't know. So for me, I got rid of most of my longs on this day. I was feeling good. I'm like, the oscillator's plus 80, I'm gone. On this day, I got short the spiders, and I was like, you know what? I'll figure it out, because we had a few signs, whether it was the IBB red, you had the Russell red, the Qs red, you had high beta tech going from green to red, and then this happened. So I think a bunch of us traded our little butts off today trying to trade around it, okay? And it wasn't easy. If you look at the spiders, I'll show you how we did it today, or tried to do it at least. First things first. Okay, that's not the spiders, it's the USO. People are like, how'd you do it? First things first. I added a little spiders on what's it called? On the open. All right, and then came in and tested the post Bank of America news. Remember the Bank of not Bank of America, Bank of England didn't cut. So that's where it was pre-market. So I'm like, at least we could retest this and I can get out of some. Okay. At this point, covered some, came back up, made a new high, came in, and then basically, was wedging. So right here, going into lunchtime, I'm like, all right, let me short a little bit more, put a stop in at the high of the day, and we'll see if I could trade my way out of it again. But let me put a stop in a little bit below the low, because lately we've been making a new stop by 20 cents or so, and it's now falling apart. So shorted more here, which you saw in the VTF. I said I'm shorting more here, which was like whatever. It was like 216.40-ish with a stop at the high of the day. Put it on my private Twitter, and I put an order in at 215, actually 67. So I kind of got lucky. It came below the morning low. I guess some guys could have added here too for a little bit of a cash flow trade, and basically covered half into that, and then into right back into this spot. Said, okay, you know what? Since I got a lucky cover while I was on my spin class, I'll shorted more. So now I'm back to what I was short overnight, the prior night. So all in all, I actually was I actually made money in the spider trade, and I came in short. Yeah, and it was not the easiest thing to do. I actually lost money trading. Not say actually, because I've lost money trading before. In the beginning part of the day, I'm like, you know what, let me trade around my spiders, and if we're strong, let me see if we could buy Facebook. Let me see if Netflix can go. Let me see if Twitter could be viable in the bid. Let's see if Amazon after 2 down days. And all of those kind of sucked. Actually, I'm not allowed to say that word. We're feeble. Amazon, let's just go back to the daily chart. Amazon basically had its like third down day, and it's while the market's breaking out, it's just hanging out here, which usually doesn't happen. So that's why maybe we had a little bit of selling on the brain. We'll see what happens here tomorrow if it breaks below that and tags the 21-day. It was weak. Facebook, not acting special. It came off the lows a little bit. It's on the radar, but it is actually holding higher. Last time you could have bought it was here. Last 3 days, while the market broke out to all-time highs, it did not lead. So I don't know what that means. It means maybe money's in other places rotating, but we'll see if what happens there next. Netflix, we talked about that setup. At least this, paid traders, who went with this one. This broke out above this little wedge here, closed pretty well, and now you'll see if the 200 comes into play. Earnings on Monday, so it's always a little tougher to trade it now. What's it called? Twitter. I didn't go over Twitter. Remember I told you I sold it on this day. Well, I got back into it, and I'm going to try and just sit in some and buy dips. And I think at some point it takes this out and makes the run towards this 200 day. So instead of just being out of it, I'm going to trade a tier system around it, which is what I did during this entire process here, which was pretty fruitful. And then what else happened today? What happened? Metals. Metals this week was erratic, very erratic, right? GLD, if you went out short the GLD on Tuesday, Wednesday you were a little upset, probably covered, and then this happens on Thursday. Opens down, goes to the 21-day. But you know what? The 21-day held. Good momentum sectors and plays hold the 21-day. So if you sold it because it was so extended from the 8-day, you were able to maybe buy the dip at the 21-day. Which is kind of what we're trying to do here in the spiders. It's just not happening yet. Look how the spiders are. Look where the 8-day is. That's why I'm having trouble here. I'm having trouble because, we've been up 7 days. Look where the 8-day is. Look where the 21-day is. And I know at some point, it always comes back. Even on this move, came back. Even on, this move, came back. It always comes back. Just sometimes it gets a little extended further and you have to take a little bit more pain. So what did the IBBs do today? IBBs, at least if you went out short the IBBs, you were able to short the open, and it never got back to yesterday's high, so it's showing a little relative weakness. The Russell also. If you shorted the Russell overnight because it actually, had a red bar, and you didn't go with the spiders, you did better than I did because you were able to short the open and wound up going red again. So, it's letting some the moving averages play catch up. What else? The Qs, I think, were a little stronger. Another little doji day, doji, down day, doji. Those are little tough days. You know what had a good day today? Apple. Apple broke out, of this little lower range. It's got the dividend, it's got the buyback, it's got room. So if they want to keep this market going, because it's, it's in the Dow, it's in the S&P, et cetera, here was a clean break. And now it looks as if it's on its way up to here, or just like all the other stocks that have been broken, they're making their way to the 200 days. So why not Apple? So anyway, first day out. So I actually took a little Apple long just because I don't know. I want some more pain. Hopefully the same thing doesn't happen to me. What happened to me remember that Friday? I took some Apple here into this first day. What wasn't as strong as this one, and then that happened. The whole Beijing thing. Or I don't even know when that was. That was just not a lot of fun. But anyway, we'll see. If there's any kind of follow through in that. And then you had oil that was down 4% yesterday, it was up 2% today. The XLE still building. I think there's something going on here, but it's hard. When you get these gap ups and go nowhere, it's just not the most conducive for trading. Here, it opened, held, going sideways. At some point, I feel like this is going to break to the upside. It's just a matter of when. USO, let's see that real quick. Didn't really close so well. Still on the right side of this little channel here. Broke below this, and still, on the right side. So it's not. This is actually acting, a little out of play, but the market doesn't notice it yet or care yet, I guess. Twilo was a great trade yesterday and had follow through today, and then, it sold off. So it'll give another setup. These things happen. Twilo. Pricing and timing matters, right? Here was your buy. If you missed that, here's your gap up buy. And then it actually opened up and came in. So at least you're getting some 2A action. At this point now, let it go sideways, and then maybe it'll set up again. I know the quiet period's over, I think, next week, so we'll we'll see what happens next. ACIA also did a lot of the same thing too. Guys yesterday were shaking out of their boots when this pull-in happened here. And then look at it. So again, entries and exits matter. Okay, here was your breakout, gave you 2 days. If you didn't sell on this day, you might have got stopped out here. If you sold into that day, you could say, oh, I'm going to buy it back on the breakout of the prior pivot. Here you go. It's in the 8th day, and then boom, and now you're in it for new highs. So entries and exits matter. Or if you really have a thesis, you sit. JP Morgan came out with earnings, gapped up, and did a whole lot of nothing. We'll see more bank earnings soon. Let's look at the chart. Look at that. It gapped up and closed on the lows. So, basically we'll see if this gap gets filled over the next few sessions. It's extended from the moving averages. Would have thought that the market could have came in a little bit more with, the bank selling down after the gap up. So we'll see. We'll see what happens. There's been very strong bullish action, and if you're trying to be cute, which I did today, and I lost money today actually. Not I said actually, I lose money at times to time, so I can't say actually. I make more money than I lose money, but I did lose money today trying to be cute. And I guess I'm a glutton for punishment because I have the same exact short as I had last night, but I actually traded around it, so I'm doing it from a little bit of a higher level, and I'm trying to find that down day and to get rebalanced to then get back in my longs, and that could be a tedious task. But overall, very healthy action, lots of back and forth, some divergences to give you some caution. The oscillator is very overbought, so if you wanted to be flat into a Friday and you had a great week, be flat. Maybe there'll be some opportunities to day trade tomorrow. That IPO that you'll see all day long, people talking about how it was the biggest and best IPO of the year. You know what it did? It sucked. I said that word again. It wasn't good. Why wasn't it good? Let me show you why. Because of the art of the first day. Okay, the law of supply and demand. It did absolutely nothing for you, after the first 5 minutes. What's the art of the first day, Red Dog? Okay, let me tell you what the art of the first day is. The art of the first day is once you get your opening print, okay, it usually pushes, okay. You mark this down right here, and then if this is any good, it goes sideways, it builds, they cut through all the flippers, the people that, try and get out, the people that are getting their free lunch from the 20s, and then all of a sudden it gets above it, and it goes. Didn't happen. Went here, went below it. So this was your first, all right, let me reduce. And then a lot of us had stops in right here at the 42 level and got stopped out, and now just did a whole lot of nothing. Wasn't the greatest IPO. If they opened it here and it closed there, that would have been a great IPO. Twilo was a great IPO. Twilo gave you opportunities, after the first 5 minutes of trade. So let's see if we can get there using this chart. Hold your horses. Okay, maybe not. Maybe on a 15-minute chart we could do it. 15-minute chart. Anyway, actually look at this nice little trend in Twilo. Trend is your friend until it's not. But anyway, you know what I'm talking about. So in closing, hopefully you're not too frustrated. Hopefully, you've taken your slice out of this rally, however which way you're comfortable in doing so. And if you did it too early, maybe next time you'll hang around longer. If you started shorting too early, maybe next time you'll wait for more of a signal. And if you happen to be sitting on your hands now and waiting for a better setup, that's cool too. Listen, have a great Thursday night. I'll see you tomorrow. Actually, I'm trading from Short Hills, and I'll be on the VTF and in the I got like a little tickle in my throat. I'm going to miss everybody. No. I'll be on Twitter tomorrow, and good luck, have fun, and that's that.